Hey guys, how's it going? I want to do a video on why I believe that the dollar is heading, maybe not in the next few days, but over the course of the next few months, a mean reversion trade to the downside. And I'm not looking at the regular charts everyone's looking at. I'm looking at supply and demand of the commercial money. This was an indicator created by Larry Williams. And I wanted to look at, first of all, this side over here is the long minus short of the commercial money. This side over here in red shows the COT indicator. Zero over here means that it's overbought, and one over here means it's oversold. Now I'm looking at the bond market chart of the commercial money supply and demand from 2014 2016. And what was quite interesting, the net amount of short position was approximately 130,000 negative contracts sold in June of this year. This was timing out with the bond market topping out. Really interesting. These were the most amount of contracts sold relative to long contracts in the past 7 years. I'm going to show you another chart. Now over here, it's showing that the net amount of long people, the commercial money, 70,000 versus if you look at the COT indicator, it's at 1. That is quite impressive. Over the past 3 years, this is the most amount that the commercial money has bought, right? You may say, you know what? You need to look at a longer time frame because we're in a different time frame because number one, you're in a rising interest rate environment. That's fair thing to say. Okay, now let's look at 2009. The current what we're seeing right now. Let me get this chart if it ever comes up. All right, here we go. This amount in blue shows the net amount of contracts that the commercials have, and the COT indicator is in red, showing once again 0 overbought. Get to 1, it's oversold. You see 2009, right? Bonds were extremely oversold and it rallied, right? A lot of people like me thought, hey, you know what? It's best time to short. Maybe not the best time. I wish I had this indicator back then. I knew about it, but you learn through experience. You learn through your failures. Now, this was June of this year. This was the most amount of contracts sold to the downside, which I mentioned before, right? 130,000 contracts to the downside. COT indicator showing this at 0, saying sell, 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 sell. Now the COT indicator over a 7-year time frame, right? This is a different time frame than that other chart, which is 3 years. This is saying 0.70, and this was as of Tuesday. So as of Tuesday, what happened to the bond market? It sold off even more, approximately like maybe 1.5%, or maybe 1.5%. I'm looking at TLT. So that being said, it's showing you that guess what? It's coming to the area of oversold. Now, that being said, if you haven't sold bonds at this moment, in my opinion, you may have a better shot down the road. And I still think that interest rates are going higher, but I think that this move is a bit overdone and you could see still some more selling off. And noting that the commercial monies, they have been the most net long in the past 3 years, you should come to think about it. Like, why would they go long after the past few years they've been basically net short? Now, I want to look at some other currencies. The euro, if I can ever get this thing to go. Okay, there we go. Same chart here, euro on this side, COT indicator on this side in red. And if you want to see, right now it's at 0.57, so it's not extremely oversold according to this indicator. It's not where it was in 2015, January 2015, where it was extremely oversold. But This was as of Tuesday, so you don't know what has changed since then. You saw still more selling after Tuesday, so this ratio may be above 0.60. So those who haven't started shorting the euro, just think about it. Your time was to sell it right here, right? Or maybe when the price was at 1.17 that one night earlier this year. Now I want to look at Japanese yen. Just hold on for a second. So you're starting to see more commercial money buying the bond market. You see more commercial money buying the euro based on this metric. And the euro's like approximately 59% of the dollar index. So this is just putting into perspective. I know some high momentum guys may be like, you know what, I care about the short term, like the next 2-3 days. So they may aggressively short to the downside because that's how they operate. I try to look at things from maybe a longer term perspective than the high momentum guys. Now, if you want to look at the yen, which is approximately 10 to 11% of the dollar index, and yen's on this side, COT indicators on this side. This time it's blue COT indicator, and it's really close to the euro indicator. The euro indicator was 0.57. This is approximately 0.53, but this was on Tuesday again. So my hunch is that this indicator is going to go higher. And what I noticed was that the amount of people going long has increased in the Japanese yen. There's been a shift. Just because there's a shift doesn't mean that the price is going to change overnight. So this is something to realize. And what I find quite interesting, last year this indicator hit 1, right? Oversold. Yen was extremely oversold. And then you see all the way down here, the COT indicator is close to 0, right? Over here, over here. This is your signal to get short the yen. And now it just seems that people are buying the yen now. And with the market going up and up and up, right? In my opinion, you're going to see a correction. And what usually happens with currencies, the yen, people start to buy it, right? The carry trade temporarily stops versus the carry trade. So this is just interesting that there's been a shift of the smart money in that. And then if you want to look at gold over here, what I found quite interesting was this year, June, while the bonds were topping out, you saw high open interest in gold, and also the COT indicator hit 0. These were the most contracts sold, naked contracts sold to the downside in over 7 years. I didn't look at the data before that. So the commercial money, they're hedgers, right? So I've never seen a positive COT report for this year, looking at the metrics just now. So this is really interesting. And now the COT indicators, what? It's like 0.55, 0.56. So you have the shift of the shorts, commercial shorts being let go by the gold market. These hedgers, they're saying like, you know what? Maybe this is not the best time to hedge. Best time to hedge was in June, July, Brexit, right? And what was quite interesting last year, gold price was at the bottom, right? 1040-ish, right? And the COT indicator was 1, showing that it was way oversold. And the open interest, or the net long minus short, was only minus 2800. That was the lowest amount. That was actually the highest amount if you compared to all of the other times. And that was your signal to go long. And we're getting closer, in my opinion, where the gold prices are going to shift course and go back higher. And the COT indicator showing that commercial hedgers are starting to leave.